Good evening, everyone. My name is Paul Young. I'm doing a series of videos. This particular video is focused on the NDP platform, and I'm kind of going to walk you through what's been said so far in terms of Thomas Mulcair's plan, in terms of what he plans to spend money or generate revenue. Now, this video is done as of basically September 12th. There'll probably be subsequent changes with the platform, and then I'll subsequently review the video. I do not believe he will make a huge wholesale changes because we're about a month away from the election. He likely will expand on some areas, but in general he hasn't really done a lot of expanding on concepts. So let me talk about a couple of things right now. This basically what I've done is the government prepares an annual budget every year, which becomes the budget bill. That's basically how the budget process basically ends. And that budget process ends with basically the budget speech being presented by the Minister of Finance. Now, they put their projections out in terms of what they're going to do, the target for their fiscal year, and basically 1 to 5 and 10-year plan in terms of goals and objectives, but mostly they're focusing on 1, 2, and 3 years out as part of their targets. Now, throughout the presentation, I basically have made some assumptions about a couple things. Now, it changes a bit with the NDP because they have been initially all over the map in terms of how they were going to generate revenue in terms of their tax and spend processes. He subsequently has changed his direction. Either he's trying to be more of a moderate conservative to kind of bring in that soft conservative vote, or he's trying to kind of show that he's a nice person to kind of make him a little bit of differentiation between basically Justin Trudeau, as well as try to gain some support from Harper's people that might be disillusioned with Stephen Harper. So he's backpedaled. Initially, when he talked about revenue, he talked a bit about the income tax, corporate taxes, and in Canada's case, we're about 16% that were basically at a corporate tax at a federal level. The combined normally across Canada is around about 27.5% if you take about 11.5% on average for the provinces and the territories, as well as basically the 16% federally. In here, he's backpedaled. He originally said he was going to jack up the corporate tax rate. He's since subsequently backpedaled, and he's basically said that he may only look at a 1.5% increase. Now, typically, whenever you do revenue changes, they typically are phased in. So what I did with the assumptions in this particular revenue target is I assumed that he was going to phase in the 0.5 point over a period of 3 years, because there's no way in year one that he's going to bring in a 1.5% increase in corporate taxes. He'll likely phase it in. I brought that into play. The other thing too that I made the assumption to, he's been clearly succinct in it. He's basically said that he'll drop the small business tax rate, corporate rate, to from 11% to 9%. That likely will happen in year one. So my analysis shows you the cut in year one and then the growth from year one after. And then I also just use modest growth rates for other areas of payroll taxes, GST, and just overall revenue. I also brought in cap and trade as well, because that is something he's talked about, but he hasn't been clearly on how he would set that up. So I've made some assumptions on cap and trade. So if you look at this particular slide here now, I've made some assumptions. So basically, the 2015-2016 will be the last budget for the ruling government. Now, if Stephen Harper's changed, then he'll have another mandate, but it's the last budget. So that budget bill's been approved, and that's the money's being allocated for this year. So when the next government is formed, and say in November, the thing that they will do likely will be, is their first budget will be, is the 2016 to 2017. So this is where you're seeing where I basically estimate that corporate taxes will be about just under $1 billion, and based on tax heights, I put normal corporate tax growth of about 2.5%. That seems to be conservative in terms of its estimate. The other thing that I did is Mulcair has talked about hiking the personal tax rate for the top 1%. Now, this is a misleading one, because It's never been proven to be truly effective by hiking the tax rate to the top 1%, and therefore I basically conservatively estimated the numbers to be half of what, or a quarter of what, the government estimates it, because there's no way I believe that they'll ever hit the target that they think on the backs of the top 1%. Because let me explain to you in a couple things in the top 1%. It's never clearly defined either by Thomas Mulcair or Justin Trudeau. The top 1% pay 18% of the federal income tax. These people have options through the CRA and Canadian Revenue Agency, through the Income Tax Act. So they can move things around in different things to kind of minimize some of their income tax impact. It's not avoidance, it's within the rules. And the more you put more pressure on them, the more it basically will be ineffective in terms of the capital redistribution of the income over to social programs. And the other thing is, you're not going to get these people investing, and some of the top 1% are invest in the country, invest in companies, invest in pension funds. These all drive the economics of a country. So you won't hear them talk about that, but the reason why they target the top 1%, because they typically will never vote for NDP, and they typically will never vote for Liberal either. The GST, I brought this in as well because at one time he talked about hiking the GST. He's now since subsequently pulled back on that. And it's kind of funny because socialists, most of them, basically believe that GST is a way to kind of fund roads and all that, because it's basically is the most effective way to help for governments in terms of taxation. Because the argument is if you increase or reduce personal income taxes, it'll increase personal debt. I don't necessarily agree with that. I agree that you have to have a balanced approach with taxation, including to have your consumption taxes right and disposable income. But also people need to be responsible for their own household finances and live by a cash budget. Well, that will never happen if you talk to people that support a lot of cases that on the NDP's low informed voters, or typically don't even probably run by a cash budget, right? Or a budget that basically they need to run by each month. I've also added in cap and trade. This is based on Jack Layton's plan in 2011. He estimated 6 or 7 billion a year in cap trade. I'm not sure that will ever happen that way. Realistically, I went half that way. The other thing is cap and trade has been fraught with major errors and issues in Europe. It's not been effective. It hasn't really brought down emissions. It's actually pushed cost up by 8 to 10%. So where Mr. Mulcair talks about the GST being, oh, this is nice, I don't want to do it. The GST impacts consumer. Carbon tax will go on anything because everything requires carbon, from delivery to the house you live in to everything else. So it hits people hard. Yet Thomas Mulcair never talks about that. And it's not surprising because Mulcair is not a guy that's got a finance background. He failed as a Minister of Environment, and you're more welcome to check out this guy. What I really encourage you to is see beyond what his statements are, to actually go look at the substance. And this guy isn't a man of much substance. He's all about pandering for votes. So you really need to kind of look at things, and this illustrates to you that in general, that by the third year of his mandate, he'll have revenue a total of $332 billion. That's only marginally, or about $6 billion more than what Harper has targeted. So despite all these new spending increases, he's only looking at revenue of about $6 billion more. Let's talk about spending. A couple things quickly. I kept the baseline expenses because that basically includes OAS, that includes EI payouts, that includes transfers to the provinces, and that includes direct program spending. Now, direct program spending, that would be stuff going directly into the military and stuff like that, is about $80 billion a year. So the bulk of the other spending gets into key programs that drive government. That's healthcare, education. So I left the same number that Mr. Harper kind of forecasted out that he was going to hit, because without truly understanding where this guy's going to cut or expand, it really makes sense to keep this number in. What I did is I added additional spending over and above the baseline. So he's committed another $1.3 billion in infrastructure over and above the gas tax and Build Canada Fund. He's looking at daycare, so he's going to implement it gradually to eventually where it'll be costing about $5 billion a year. He's going to add in a couple of innovation funds, which is automotive, support the automotive sector. There's already an automotive fund that Stephen Harper's created. He wants to expand the money. He wants to expand more money into aerospace. That's where you're seeing the 40 million more a year. Again, there's already an existing fund, but Mulcair wants to put more and more money into aerospace as targeted to kind of look at that sector. Again, automotive and aerospace are key areas that will be driven by cap and trade. Why, you're saying? Because they're still relying on diesel, jet fuel, gasoline. They're also relying on metals, whether that's aluminum, titanium. You're talking about things that have to be metal and fabricated. So despite what he says and despite what his targets are, he's actually going to hurt those industries by basically saying, I'll give you money back, but I'm going to take it back through his taxation processes. Because even his corporate tax, basically he said he's going to target large corporations. Okay, well, he said medium, but I don't know how you're going to break out the difference between medium and large corporations, because typically that's not how they do, because they qualify based on a certain threshold. So he's going to have to rework that. There's what we call CCPCs that can be eligible for small business deduction, and there's also what we call as large Canadian controlled corporations too as well. But you'll never hear him talk about the specific details, because why? Because he tries to go after the social welfare to play to his low-informed voter that think corporations are nasty. I've done another presentation on Economics 101. I would encourage you to go watch that video because it really explains the impact of taxation processes. I've added in the subsidy for Canada Post because he's been clear on that he wants to add about $250 million to support door-to-door mail. I've added in the healthcare growth. This is because the Council of Canadians said that healthcare is underfunded by $36 billion over 10 years, so $3.6 billion a year. Now, I've had some discussions on this on further presentations where I went into great specific details on that, so I would encourage you to watch that video. I've added in GIS, which is the government's guaranteed income supplement that he's basically planning to do. So he's planning to add $400 million to that to support seniors. I've ignored some other stuff. There's some boutique stuff he's talked about. It's likely right now about 200-300 million more, but it's mute in terms of the overall expending. It's not going to make a big dent to the overall assumptions that I put in terms of total spending. So let's look at total spending in year one. Based on what I project out by the statements and the comments and everything else that's been portrayed by either Mulcair or by the media, I estimate that in year one he's going to spend about $281 billion. Stephen Harper, at the same time, his targets right now would be based on his plan would be $274 million. So in year one, you're already seeing that Stephen Harper, Thomas Mulcair is actually going to spend about $6 billion more, and this continually expands out to where you get to 2018, 2019. That he's spending $20 billion more than that. Now, remember that is, if we go to the next slide, based on projections that I've done and calculated, is he's really got a revenue problem. Now, how did he make up that shortfall of revenue? We don't know yet. He hasn't been clear on that. But he has a gap right now, and it's structural. And it's funny because he doesn't really talk about that. He says basically the opposition parties are ganging up on him, but really he's the one that has to defend his numbers. And by looking at this graph, you're seeing that over that period of 3 years he's actually got a $20 billion hole in his plan. So then you ask yourself, well, what can he do? Well, let's look at the statement of operations now. Well, most of the bulk of the revenue from the government is in taxation, whether it's GST, corporate, or personal taxes, right? So what's he going to do? Hike more personal taxes? Now, I left CPP out of that because CPP goes in a separate fund. It doesn't impact the statement of operations. It goes into a dedicated fund. So that number's not in there. So it shows you, where is he going to come up with all this new revenue? Okay, so is he going to increase personal taxes? Is he going to increase corporate taxes more? Is he planning to really grow the economy by 6% or more? When in essence, with the way the dynamics of the economy are growing, that's not probably fundamentally going to happen. Is he looking at basically taking a look at basically the size of government? So is he going to cut? Is he going to cut OAS? Is he going to cut EI benefits? Is he going to look at other direct program spending, which I said 80 billion? So is he going to cut 20 billion out of there? Yet he says he supports the vets. So these are clear questions but it's not surprising that when you deal with the NDP, that's what you get. They normally never expect they're going to get elected, so they throw everything out there, including the kitchen sink, with their statements. My suggestion would be is question them. Is where is this spending gap is? And if you don't believe me, go look at how the province of Manitoba is run. That's how you get with Thomas Mulcair government at a federal level. And it's got huge debt and deficit issues. Mulcair seems to not understand that, and it's not surprising. He's a hypocrite. He'll call out Harper for the deficit and the debt being growing under his. He'll call out the Harper for because he's led periods of economic growth, the worst in 50, 60 years. But he'll never call out or never discuss the reality of what triggers these numbers. Why? Because he can't win on policy. What he can win on is playing with low emotion on the emotional voter to target them. That's all he does. And if you listen to his recent speech on ISIS, or anything like that, he's typically targeting people on emotion. This guy will never debate or discuss details because A, he's not capable, B, he would never be able to give you a clear statement without having a hidden agenda. And if you want to know what a hidden agenda is, go look at what happened in the Ontario election. When the Ontario election was done, and Wynne is used as an example because she aligns more as a socialist government the way that you would see basically Mulcair operate, because she's bringing in cap and trade, pension plan expansions, all that. That's all the stuff that Thomas Mulcair supports. Now let's stop there for a second. Here, Wynne never ran on certain aspects of her policy. She didn't run on cap and trade. Guess what's in the plan? She didn't run on her sex edge program. That didn't come into play. So you can see that despite what some of these policy leaders say, they have hidden agendas. And that's why I would encourage you to basically reach out and go beyond the rhetoric that these people are saying